Good morning and happy Thursday to everyone. My name is Tony Butler. I'm one of the life sales directors here at Insurance Agency Marketing Services. And today I have with me Andrew Herrera, who is Regional Vice President with North American. And we're going to talk a little bit about some things to help you grow your business here with North American. But before we get started, wanted to do a little housekeeping here with everyone and briefly just talk about the things that we offer here at Insurance Agency Marketing Services. We are big on not only providing our advisors with sales ideas and sales strategies to help grow their business, but also giving you the opportunity to earn additional money over and above the commissions that you're paid on the business that you write. So a few things that we do offer is our new producers builders. As you see here, there are different levels, and based on those levels, there are perks, if you will. So you can get anything from 1,500 piece mailer to a 3,000 piece mailer. There's a Ritz-Carlton stay package, along with some other seminars and other tutorials that you can provide to your clients. If you have any questions in regards to our new producers builders, please don't hesitate to give us a call. Any one of our sales directors would be more than happy to answer any questions that you have. We also have our IMS Business Builders, which is a referral program that we offer to our advisors. So if you do refer an agent over times and we get those agents appointed with any of the carriers that we work with, you do get a $50 referral bonus. Anything over and above that they write with those carriers, there are some spiffs, if you will, in regards to that business that we pay on as well. So depending on the type of business that they write, there's additional monies in there for you also. We also provide you with back office support. We like to say we want you to work smarter, not harder. So with that, there is a plethora of sales tools that we have available for you. Paperless contracting, which is huge as well. Our website provides you with a lot of information, whether it's life and annuity quotes. We can provide case design assistance for you. We want to work with you all the way from submissions to commissions. I briefly touched on our website. As you see here, our website is imsinc.com. Some of the things that are offered on the website are a lot of sales tools available for you. We have a term and universal life quote comparison tool available for those of you that work in the life insurance space. There are forms that are available online, industry information that's available to you, as well as annuity and long-term care information. If you need assistance in navigating through our website, we'd be more than happy to work with you on that. Give us a call and any one of our sales directors can kind of talk you through that. We also provide e-app solutions for you as well. The way the market is trending, electronic applications is pretty much the thing of the now as well as the future. So there are a few platforms that are available to you to submit electronic applications. One is Firelight, which the majority of the annuity carriers that we work with are on that platform. We have iPipeline, which the majority of life carriers that we work with is on that platform. And then we also have Sunfire. As you see here, there's a list of carriers that are available on Firelight for annuities as well as life insurance. If you're not registered on the Firelight platform, you can do that through our website. If you need assistance with that, we'll be more than happy to help you with that. We also offer creative marketing solutions for all of our advisors. So whether it's turnkey, agency, or digital solutions, I think we have an answer to those needs for you. Whether it's professionally written handouts, newsletters, or postcards, you're looking for business cards, brochures, you are looking for a logo and need assistance with designing that or redesigning your logo, or you're looking to get in the digital marketing space, you need website help, or digital marketing strategies. We can assist with that. I would strongly recommend that you reach out to your sales advisor. And what we can do is do what's called a marketing analysis, kind of talk about what you're currently doing with your business, um, open up some areas of opportunities for you, and see what we can do to help you grow that business. We also have our IAMS Wealth Management team available to all of our advisors. And for your high net worth clients, this is a team that you definitely want to partner with. They can definitely help you increase your revenue, improve client retention, as well as strengthen those relationships with those clients. So feel free to reach out to us. We can get you over to Charles and his team, and they'd be more than happy to work with you on that. One of the things that we pride ourselves on is our Life and Annuity Academy that we do. It's a 2-day training that includes a lot of helpful information and tools, whether it's sales ideas and strategies in the market space, whether it's life or annuities, advanced markets, things like that. We have found that doing the Life and Annuity Academy has only helped agents grow their business and strengthen the relationships with IAMS and our advisors. And I believe I've got a polling question in regards to the Academy. So I want to make sure that if you're interested in attending the Academy or want more information, I want to get that out to you. Hang on just a second. Let me see if we have that. Yep, I do. I'm going to go ahead and launch that. If that is something that does interest you where you want more information, please go ahead and respond and we'll get additional information out to you. All right, I'm gonna go ahead and close that down. And there is a trip that we have for 2024 that we're talking about, the Summit by the Sea. As you see here, it's in regards to a theme. The qualification periods are listed here, 7/1 of 2023 through 6/30 of 2024. And as you see here, the trip dates, it's scheduled for August 25th through the 28th. If you have questions in regards to where you stand as far as qualifications go, or if you have questions regarding qualifications, feel free to reach out to us. We'd be more than happy to provide you with more information on that. Okay, and with that, Andrew, I am going to switch it over to you.
Thank you, Tony. And Tony, let me know if you can see my screen there.
Yes, I can.
Awesome. Appreciate the invitation to be here this morning, partnering with IAMS on this webinar. When Tony asked me, what I wanted to present on, I wanted to share, some areas that we were seeing a lot of success in here at North American. I would say in the life insurance industry in general. And my hope is, as we're still in Q1 here in 2024, I hope if you are tuning in today that life insurance is part of your practice. And if it's not, then hopefully some of the ideas that I share can help you implement life insurance as part of your practice, not just to increase your revenue, which is certainly an added bonus, but more importantly, to put clients in a better position and bring some solutions that would really make a difference in their life, especially in the future and in retirement. So a couple of things I'm going to cover here this morning. First, just give me an overview of North American, who we are, if you aren't familiar yet with the North American story. Then I want to share 5 winning solutions and then wrap up with some final thoughts. So perhaps you've heard of North American, if we're so fortunate enough, maybe you've done business with us already. But the things we really pride ourselves in are, number one, the people that we have here. We're a Midwest-based life insurance company. We've been around for 100+ years. We're privately owned, which means we're ESOP owned. And that really matters, especially in the insurance space. If any of you have been in the insurance industry a number of years, You've seen, publicly traded carriers and some of the decisions they've had to make related to the marketplace or to their product portfolio. I know probably more recently is private equity type carriers, and I know there's some fear around that as well. And the fact that we are a private company, right? So we're not owned by private equity, we're not publicly traded, means that we make decisions based on what's good for us, what's based on the consumer, what's good based on the agent as well. And we make those decisions based on the long term. So we don't have a short-term window, short-term horizons. Like I mentioned, we've been around over 100 plus years. We plan on being around well into the future as well. We're also A plus rated. We have been for decades. And so you don't have to worry when you do business with us, what kind of carriers are North American? Have they been around a long time? What are their ratings? We understand we are in the promise business, and we want to be around to deliver on those promises to your clients. And when it comes to product, we've got a diversification of product, from protection to income to legacy. Here's our entire life insurance product portfolio that you're looking at here. Everything from, what's the highest death benefit, the highest protection I can get for the lowest cost. You can see terms all the way on the left. Moving on to our GUL, GIUL, accumulation IUL products, and certainly all the way on the right end of the spectrum, you're going to get a lower death benefit, but more cash accumulation. I'm not going to go into depth in our products today. By default, as I share some examples, I will highlight some of the product features. But really, if you want additional information on our products, feel free to reach out to Tony or your life marketer at IAMS, as well as us at North American. Tony mentioned, something that IAMS does is they use digital tools to help process business. And we partner with IAMS through the platforms that they have to offer that to you as well. One of the neat things about North American is you can do business all the way from the beginning to the end, completely digitally, right? So that e-app that Tony mentioned, that turns into the online part too. So the client gets a link that's emailed to them. What that means is the client clicks on that link and they answer. It takes probably about 10 minutes to answer questions based on their lifestyle and health history. AU, so that's accelerated underwriting. About 54% of our cases are approved via accelerated underwriting. Then it moves on to e-signature if they're approved via AU. If not, they go through traditional underwriting, but it still moves on to e-signature and then eventually e-delivery. So the benefit there is your clients never have to leave their home. You never have to leave your office, and you can still do business with North American completely digital as well. I did want to give a recap of some of the numbers that we saw here at North American last year in 2023. Over 31 billion of death benefit coverage was put in force last year here at our company. Over 58,000 lives covered. And again, if you are currently writing with North American, we appreciate the opportunity to earn your business. We appreciate you contributing to these numbers, right? And lives that were protected, and families that were protected, and businesses that were protected because of that life insurance that was put in force. But we also paid out death claims, right? I mentioned earlier, we want to fulfill the promises that we make and keep those promises. Over $1 billion in death claims did we pay out last year, and over $17 million in accelerated death benefits. So that would be the critical, the chronic, and terminal illness riders. And I'll touch on those riders here in a little bit as well. You may be thinking, well, Andrew, you've got a great product portfolio in North American. How's your underwriting? And I wanted to share some of those numbers for 2023 with you as well. So in 2023, nearly 90%, right? So 89% of the offers that we made were standard or better. That means if you had applied to North American in 2023, there was pretty much a 90% chance that you were going to get a standard or better offer. And nearly half of our business, just shy of that, right, 48% of the offers that we made were preferred or preferred best, our top two risk classes. And so that tells you that our underwriting is extremely competitive. We make really good offers, and the majority of our offers, again, are going to be standard or better. Accelerated underwriting, that's I mentioned that in the digital slide before this one. And I mentioned that 54% of our cases were approved for that. What that means, if you're not familiar with accelerated underwriting, that's for ages 18 to 50 up to $2 million, and ages 51 to 60 up to $1 million. So if a client is within those age ranges and up to one of those face amounts, they can be approved via accelerated underwriting. And if a client is approved via accelerated underwriting, then usually that approval happens within 24 to 48 hours, and they do not need to do any blood or urine. So we simply look at different data points like motor vehicle report, prescription report, MIP history, the application information that we obtain, and we put it through an algorithm, and we can see if we can approve a client right away through that, or if they need to go through traditional underwriting. Even if a client needs to go through traditional underwriting, on average, that's taking 32 days, which is one of the shortest turnaround times in the industry. You can see the slide or the bullet point above, it says 7 days for accelerated underwriting. That's not how long the approval takes. Like I said, the approval will happen within a day or two. 7 days, that is usually from the time we get the application to the time it's delivered. And we also pay commissions daily. So we understand how important it is, not just to place business quickly, but to get you paid as well. And it's certainly a priority with us. So all in all, we're making really competitive offers, and we're turning around business very quickly. So that was just a recap on North American, again, a high-level overview on who we are as a life insurance company. But more importantly, I want to talk about some solutions that I think can help you this year in 2024 and certainly help your clients. The first one is, what I'll call pre-retiree retirement planning. And as we think about this, one of the things that comes to my mind when I think about this solution for a client really stems back, I would say, probably been 2 years now, that there was a study done by Ernst & Young, and I think it was late October 2022. And in fact, that study is about to be updated, I think, any week now. Ernst & Young is going to re-release that retirement study. And the neat thing about that study is Ernst & Young, again, a third party, so this wasn't put on by a life insurance or annuity company. They said, we want to analyze across different ages and across different databases, how does someone best succeed in retirement? Like, what's the most successful retirement portfolio look like? And a lot of people always think, that's qualified retirement plan, assets under management, and maybe occasionally if you need, life insurance, the old Dave Ramsey approach, you can buy term, but you should really invest the rest. And the neat thing about this study is, again, I looked at 30-year-olds, 40-year-olds, 50-year-olds, everybody across, I think they did over 1,000 different scenarios, different interest rates, different market returns. And to summarize it found this, that to have the highest probability of success in retirement, you not only have to have a managed portfolio, but you ought to have permanent cash value life insurance and an annuity. And the reason why it said you need permanent cash value life insurance is because in years where the market goes down, that is the worst time to take money from your qualified assets. And so if you think about it, someone's in retirement and they're taking income and all they have is, assets under management, the market goes down 20 or 30%. They still need their income to live off. They still need money to live off of in retirement. So they naturally have to sell those shares. And that just rapidly depletes a client's portfolio. And so that's why, again, the study said those are the years where you ought to turn to your life insurance policy, take income in those years, and allow your other assets to rebound. And so I always remind people that, if you were having conversations with your clients about retirement, it needs to be a conversation about life insurance and permanent cash value life insurance specifically, because that is an asset that is not tied to the market. It's the only asset that provides a tax-free death benefit, tax-deferred growth, and tax-free income. So this example here, we're looking at a 50-year-old male, right? He's got a need for diversification in his retirement portfolio. He's also worried about taxes, right? That's another concern that I hear a lot, right? Especially as we project out in the future. So many clients that I talk to today, they believe that taxes will go up. They believe taxes will go up for two reasons. One, because they look at the current tax rate environment we're in, which is extremely low related to where we've been historically. And number two, they look at the amount of debt that we have in this country and say, oh my gosh, there is no way, regardless of what party's in the White House, that we can sustain our current obligations unless taxes go up in the future. And so again, this gentleman here, is there a way that he can knock out all these things that he's worried about, right? He doesn't, he wants to plan on his own terms. His current qualified plan, the government dictates, how much you can put in it. The government dictates when you can tap into that money. There's so many restrictions around that, and certainly there's nothing wrong with contributing to those types of plans. Absolutely. But he's wanting to diversify a little bit. So what he does here is he's going to fund this index universal life policy. It's our Builder Plus 3 product at North American. And he's funding it for 15 years. Let's say he wants to retire at age 65. And this is a tax-free death benefit, and the money in this product grows tax deferred. And any income he takes from this product will be tax-free. And he starts taking income, when he wants on his terms. Just for illustrative purposes, we're showing income at age 67, and then you can see here we've taken income, 2 years in his 70s, 2 years in his later 70s, turning 80. And even when all this is said and done, he still has a residual cash value and death benefit as well on this product. You can see that there. He's got $287,000 cash when he's age 80, $322,000 of a death benefit as well. And the reason that I showed income, maybe if you've seen an index universal life illustration in the past, you might see that income is illustrated every single year, in retirement. Sometimes it's illustrated for 20 years, 30 years, or, till a person dies. And that's great for, illustration purposes, especially if the client, wants to get an idea of what that would look like. But more often than not, what we're seeing actually happen in real life, because we're one of the few carriers who has been in the IUL space since inception. So we're one of the oldest IUL carriers with a large block of business. So we see how clients actually, use these products in retirement. And more often than not, they're doing exactly what that Ernst & Young study said, where their clients are saying, you know what, I don't want to take income from my life insurance policy every year. I want to take income when I need it. So in a year where the market's down, I'm going to turn to my life insurance policy. In a year where my kid goes to college and I want to help pay for that, I'm going to take income from my life insurance policy. In a year where me and my spouse want to buy a new car in retirement, we're going to take money from our life insurance policy. That's practically how we're seeing people use their IUL policies. And so that's why I wanted to illustrate a scenario more like that on here, especially knowing that, again, if a client's AUM is doing well, that might be a year where they're going to say, I'm not going to take money from an IUL that year, especially if they're combining retirement with an annuity. In addition to all that, then they have that source as well. So what you can see here is this 50-year-old client is saying, I bought this asset because I wanted that diversification. And also, if taxes go up in retirement, I don't have to worry about this asset in my life insurance policy because all that income I'm taking from that is tax-free. So it's a great death benefit protection. It's great portfolio diversification. It's great tax advantage asset that this client has. This life insurance product provides so many different benefits to this client in retirement. So as we think about, who's an ideal person for this product, Andrew, what is, if I'm talking to my clients, what type of client should I be on the lookout for that could benefit from the solution? Certainly, the first one that comes to my mind is high income earners. And the reason for that is because high income earners, they might be maxing out what they can contribute to a qualified retirement plan, right? And based on 2024 limits, I think someone making around 160,000 or above would be able to max out their 401k and still not hit that ideal threshold that a lot of advisors recommend, which is that you save 15% of your income for retirement. And so people that are making, above 160,000, if you have clients that are making 200, 300, 400, $500,000, they are certainly underperforming and undersaving what they ought to be doing for retirement because they're not even close to hitting that 15% threshold. Again, that's recommended that people save for retirement. And so is there an additional bucket? Is there something else they can contribute to? Absolutely. Permanent cash value life insurance has no restrictions. You can contribute as much as you want. You can contribute when you want. You don't have any early withdrawal penalty prior to 59 and a half like you do on other qualified retirement plans. And so, again, you don't have a lot of those restrictions. You can build a plan on your terms. A lot of business owners are saying, we've got a retirement plan here at work, but I want to do something above and beyond for me, myself. What can I do? We see a lot of business owners gravitate to these types of solutions. I would say typically it's younger ages, right? 35 to 55 is what I have outlined here. I've even seen up to age 60 that some people can fund this plan. What you don't want to do is someone that's already in their 60s, they probably don't have a long enough runway for this solution to make sense prior to them retiring. So, if a 65-year-old is interested in this, if they're going to retire in a few years, there's probably not enough of a runway for that to really perform the way it ought to perform for that client. So I would say, in your 50s, definitely you're safe. And certainly if you've got young professionals in their 30s or 40s, this is a great solution for them. The second winning solution that comes to mind for 2024 is policy review. This is something that I think we talk about a lot in the life insurance industry. And the reason we talk about it year in, year out is because it's relevant, right? So long as people have purchased a life insurance policy, there is always a need to revisit that which they purchased. And that's exactly what policy review does, especially, if you're tuning into this and you're thinking, how do I get in front of a prospect? How do I get in front of someone, that I want to have a conversation with? Or perhaps you're thinking, oh, I can't talk about this to this client about life insurance because they told me they already own life insurance. Well, have you actually looked at what they own, at what they purchased? Because that is a great opportunity to show your value as their agent, as their advisor, as a producer who's working with them, is to say, Mr. and Mrs. Client, I know you've told me, or Mr. and Mrs. Prospect, I know you told me that you have life insurance. I would love to take a look at it to see if I can put you in a better product that has more value to you, to see if I can save you some money, to see if I can help you with, the longevity of the product that you have today. There's so many different solutions depending on what the client actually wants and needs. And perhaps you can put them in a better solution. The worst case that happens by doing a policy review is that you go back to that client and you say, Mr. and Mrs. Client, what you purchased is a great product and it's still performing the way it should. It's still doing what you wanted this product to do. And I think you ought to keep it. Keep paying the premiums, keep doing whatever you're doing. And if anything, right, the client at least has peace of mind knowing that, hey, this product is still good for us. And this person, they've earned, you've earned their trust because you've reaffirmed, what they purchased. And either way, you're going to earn their trust because you either confirm that product is good, that solution is still good for them, or that you're looking out for their needs and saying, hey, you're paying too much for this, or this product's not doing well for you, and perhaps we can put you in a better solution. We're going to pick on our same 50-year-old that we just used in the last example, and we're going to show you an example of what a policy review could do. Because a lot of times we're looking at policies that were old, maybe whole life or adjustable life policies that have built up some cash value. But what we've seen the majority of the time in those policies is that they are underperforming because the interest rate assumption the client had when they first bought it has come down. And so the guarantee that the client thought they would have is not nearly long enough anymore, right? So maybe when they bought the product 15, 20 years ago, the product was supposed to be guaranteed to the client's age 90, and now we're saying the guarantee might be to the client's 70s. So the client's getting worried, saying, "Oh my gosh, I'm going to live past when this guarantee is. It's built up some cash, but this isn't doing what we thought it was going to do. Is there a better solution here?" So this client, has, what we're using as a 1035 amount of $23,500. That's the cash that he has in the existing whole life policy. And the policy, again, isn't guaranteeing as long as he would like anymore based on current projections. He's paying $1,000 a month into the current policy. And so we're saying, hey, we can 1035 that cash value from the old policy into this new product with North American. You can keep paying the $1,000 a month that you feel comfortable paying today. You're already paying your old policy. And you said that you wanted to pay that to retirement, 65, so we'll keep that the same. And in the meantime, what we're giving you is nearly a $600,000 death benefit, 596,000 and change, which is roughly the same amount of death benefit he had, slightly higher. This one is slightly higher than what he had on the whole life policy. And in addition to that, instead of the policy falling apart in his 70s, we have guaranteed this policy to age 100. So regardless of where interest rates go, regardless of how the market performs or anything in this product, it is a guaranteed death benefit that will pay all the way to age 100. So he can sleep well at night knowing that this is not going to change. This is a guaranteed death benefit, guaranteed product. So long as he pays the premium, this product will remain in force and be guaranteed. One of the neat features on this product is that it provides a return of premium feature, which I've highlighted there. So you can see in year 20 and in year 25, the client can walk away and get all his premiums back. So even if he buys this product, but his needs change down the road, and he says, you know what, I don't need that $596,000 death benefit anymore. Who knows? Maybe he won the lottery, has a huge inheritance, and his needs change, and he would like an exit strategy. We can provide that, and again, provide that return of premium feature on this product. In addition to that, like I said, death benefit is guaranteed. That death benefit, by the way, is tax-free, and he has living benefits. And I'll pause here because I think this is a good time to talk about our living benefits if you're not familiar with them. I reference them as CCT for short, critical, chronic, and terminal illness rider. The critical illness rider is if a client has one of three things: cancer, heart attack, or stroke. Those are the three most common things. The other two factors, which don't really play in, we hardly ever see it, are kidney failure, organ transplant. That would also fall under critical illness. But like I said, the three main ones are cancer, heart attack, and stroke. If the client were to have one of those events, they can accelerate a portion of that death benefit. So a portion of that 596, we can accelerate that and do a critical illness claim if they have one of those three events. Here's an example, right? Where we're paying $20,000 at age 60, if, for instance, he were to have a heart attack. Chronic illness. So chronic illness is when a client can't do two or more activities of daily living. So for example, if this client, something were to happen to him at age 75 and he can no longer bathe himself or feed himself, we would be able to accelerate $113,125 at age 75. And that would be annually, right? So he can come back the next year at age 76. And if he still certifies as chronically ill, he still can't perform, right? Two activities of daily living, we could pay out another chronic illness claim at that time. And that's coming off that 596, again, the death benefit. Alzheimer's or dementia would also fall under chronic illness, the chronic illness rider. Now, a couple things with North American's chronic illness rider that's different from pretty much every other carrier out there. One, most life insurance carriers will cap their chronic illness rider at $1 million. North American has a $2 million cap on our chronic illness rider, one of the highest in the industry. Another thing most other carriers will say is that for a chronic illness rider, if the client can't do two or more activities of daily living, that needs to be permanent. With North American, that does not need to be permanent. As long as it's over 90 days, you can qualify under the chronic illness rider. So going back to my example, where the client can't do two or more activities of daily living, like bathe or feed himself, if something happened to him and his doctor said, hey, you've been in this accident or you've got this illness, you can't bathe yourself, feed yourself, maybe for 6 months, but we expect a full recovery. Again, most other carriers would say, we're going to deny that claim because it's not permanent. With North American, we would say, absolutely, you can file under a chronic illness. We'll pay out the $113,000 and change. The terminal illness rider is 2 years or less of life expectancy. So if think terminal cancer, something along those lines, then we could pay out the terminal illness rider, which in this example here, $498,000, $498,760 is what we paid out at age 75. Unfortunately, had an example of this recently a few weeks ago on a 40-year-old who has life insurance with North American, was diagnosed with severe colon cancer, late stage colon cancer, and used that terminal illness rider, because him and his family obviously were kind of blindsided by that diagnosis, don't have the finances to deal with some of the medical treatments they're pursuing. And fortunately, at least they had a North American life insurance policy and were able to accelerate under the terminal illness rider. So again, this is an example of the living benefits that are on this product. And so going back to what we're talking about here with policy review, how many clients don't have these living benefits on their life insurance product? They think of life insurance as just death insurance and not some of these other features that you could tap into or enjoy while you were still alive. So if we think about Andrew, who's a good client, who's a good prospect to do a client review? One, any client with a life insurance policy, right? Like I mentioned before, the worst thing that can happen is you just affirm that what they have is working for them still. But certainly clients with underperforming policies, do they have old adjustable life, old whole life policies that they certainly bought in a higher interest rate environment? Those are drastically underperforming. I think there was probably 25 years straight where dividends, were decreasing. I think they're finally starting to level off or increase in the last year or so, but for a long time, dividends were decreasing. And so that's had an impact on a lot of those older policies. Clients who are interested in living benefits, right? I just shared with you how our living benefits work in North American, but perhaps these clients have old policies that don't have these features. And so they would benefit from having living benefits on a life insurance policy. Clients who want longer guarantees, saying, hey, this product's only guaranteed to 75 or 80 or 85, but maybe they thought when they bought it that was long enough or good enough, and now they're realizing people are living longer, I'm living longer, like I don't think I'm going to be dead by 85 now. And the fact that North American, we can dial that guarantee. I know the example I showed was age 100. We can dial our guarantee all the way to age 120. One of the few carriers that can guarantee a product all the way to 120. And so if you have a client who's looking for a longer guarantee, we can absolutely provide that solution to them. Or clients who are just saying, hey, I want to get more bang for my buck. And so is there a product out there where I can leverage the assets I have and get a higher return? Again, we could be a good solution potentially in those situations as well. So moving on to the third, area where we're seeing a lot of success, and I think we're going to continue to see success in 2024, is kind of the advanced market space, the business market space. And the example I'm showing here is one that we see a lot of, especially in a post-COVID world. As many of you probably heard, the last few years, the talk of, the business world, or certainly the hiring world, was the Great Resignation, and how hard it was to find good talent and keep that talent, right? It was a very competitive, and it still is to some degree, a very competitive marketplace out there. And so how do employers, really work on retaining the talent that they have? And so what we're seeing here in this example, we've got a CEO of a business, happens to be a younger group because it's a tech business, and we actually did a case similar to this recently here at North American, with pretty much the same, almost near identical with the ages and the industry. But and our key employee here, we've got a 35-year-old male who works for the tech company as a software developer. And what he's done is the programs that he's developed for this tech company have really generated a lot of growth for the business. And so if you think about it, if you're the CEO, you're thinking, yeah, sure, I run this business, but this guy here, he's a lot of the brains, right? He's come up with some of the software that has helped us grow tremendously over the last few years. And so if you're the CEO, you're thinking, man, I don't want to lose this guy. The last thing I want to do is lose this guy. What if he goes and works for the competition? Maybe he's already getting job offers from other places. Like, how do I find a way to connect him to this business and keep him here? And so what we're seeing a lot of business owners do is what we call an executive bonus, or some of you may know it as what's formally called, 162 bonus. And so what an executive bonus is it's a tool that a lot of businesses, employers use to really retain, reward, and retire these key people. So in this example, right, the CEO is saying, how do we reward how do we retain this software developer so that he doesn't go work somewhere else? And how do we show him, that he's important to us? And so typically what they do is they purchase a life insurance policy, and they say, Mr. and Mrs. Executive, this policy is your policy. You are the owner of it. We're going to pay the premium to North American, and we're going to do this for 10 years, maybe 15 years, however long they agree to do it. And so the benefit is, if you're that key employee, you're thinking, wow, this company really likes me. They really want me to stick around because they're going to put together this plan, and they're going to do this for 10 or 15 years. And all this money is going to grow inside that policy. And after that period of time, I can do whatever I want, right? I could use that to help me, maybe purchase some ownership in this company. Maybe I can use that to retire with, right? It's my asset to do what I want. And they're simply paying the premium into it. And so an executive bonus is something that we're seeing a lot more of, especially, again, since it's so easy for businesses, so much more easier, I should say, for businesses to write a premium than it is for individuals. Because a lot of business owners, especially in a post-COVID world, are saying, we need to retain this talent. We need to retain key employees, right? Whether it's a CFO, a COO, the top salesperson in organizations, anyone who they recognize is really important and would cause a financial impact if they were to leave. How do we reward these people so that they stick around and they don't want to go elsewhere? And this is one of the tools, just one of the solutions that we're seeing being implemented. And by the way, for the business owner, that is a tax deduction, right, for the business when they implement this executive bonus plan. So who's a good candidate for this, right? Again, thinking about your book as an agent and an advisor, who can you have conversations with related to this? Certainly business owners, right? Business owners love talking about their business. And while it may not be this solution that is a good solution for them, maybe there's other solutions that aren't, right? Whether it's buy-sell agreement, buy-sell review, whether it's key person insurance, split dollars. There's so many other concepts that we're seeing success with, especially since these businesses are in a low tax environment currently, especially if you're a C Corp. They are absolutely using that leverage they can get with those business dollars and implementing a lot of these plans today. Key executives, right? Maybe your client isn't the business owner. Maybe your client's the executive, right? In our example, the software developer, right? And those people say, hey, go to your company and tell them that, other people are having success with this. Maybe they can implement a plan similar to that with you as well. Family businesses. I'm here in Iowa, and we see a lot of these solutions related to family farms and ag-related businesses. They too are looking for ways to implement, whether it be how do we pass this farm to the next generation? How do we do inheritance equalization strategies? There's so many strategies that fall under the advanced market, business market space that we can help you with here at North American. Certainly individuals in large estates, especially as here in the next few years, we'll see the estate tax kind of sunset and go back to where they were once the tax cuts happen here in a couple of years, or I should say the tax cuts fade away here in a couple of years. What impact will that have on estates? Certainly there are some estate planning techniques that we can implement as well with those clients. Moving on, this is a concept that if you're familiar with North American, maybe you've heard before, and if you're not, this will probably be a little new to you because it's not really one that we see a lot in the life insurance space. North American is kind of unique with this product that we have. It's our smart builder product, but the concept of solution that we win a lot with is called the smart money one. And what it is if you think about clients, especially older age clients, I would say age 50 and above, is the fact that a lot of these clients are saying, you know what, I don't want to put money at risk. We've worked a long time, we've saved a lot, and so we don't want to put, money into a product or solution where, it could be put at risk or even if it's not liquid, right? Because they might have money in a CD, in a bank account, in a savings account, heck, underneath a mattress, wherever it is. And they might say, that's our money that we don't need today, but we'd like to have it handy in case something happens in a couple of years. And that's why it's probably not tied up in an annuity or tied up, in the market because of the risk there. An annuity because of perhaps surrender charges and whatnot. So they're saying, we desire the liquidity, but at the end of the day, if you brought them a solution that could provide them that liquidity, but more upside potential, they would certainly be open to that. And that's what the smart money concept provides. Here I'm showing a 65-year-old female who's got 250,000, what I'm calling lazy assets, meaning it's money that's not really working for her. It's just kind of on the sideline. And in this product, the Smart Builder product from North American, you can see she's putting in $250,000 on day one, guaranteed cash surrender value, $247,000 and change. That is 97% guaranteed cash surrender value because our minimum crediting rate is 2.5. And so that's what we're seeing here in the middle column. Minimum crediting rate guaranteed, 97% cash surrender value. To provide that client 97% guaranteed cash surrender value in year one, and you can see there by year two, full cost recovery, and then it goes up from there on a guaranteed basis. So Mr. and Mrs. Client, worst case scenario here, this is what you're going to see in this asset. And oh, by the way, if the index performs, you're going to see even more cash. And oh, by the way, you've got a death benefit of $400,000 plus. And so think again, if she were to get sick and she only had the $250,000 in the bank, that's what she'd be using perhaps to pay for medical bills or long-term care type help. Meanwhile, in this life insurance policy, she's going to accelerate off that higher amount, not off the 250, but off the 400,000 plus is what she can utilize to help pay for medical costs or whatever she wants, right? It's her money. She can dictate how she wants to use those funds. So this provides liquidity that a lot of clients like. It provides upside potential, and it certainly provides leverage in that death benefit. And oh, by the way, if you're saying, Andrew, 97% guaranteed cash surrender value is not enough, I need 100%, we do have a rider, which we call the waiver of surrender rider, which gives that client 100% liquidity on day one. So if they put $250,000 in, they have access to $250,000 right away. You can put up to $2 million in this product, by the way. The only caveat is it is a MEC, so it is a modified endowment contract. That's how we can get that death benefit so low and that cash so high in that product. But more often than not, we see, again, older age clients, probably 50 plus, are the majority of clients that look at this product. And frankly, most of them don't hold it for very long. They'll hold on to this product for, I think, on average, about 6 to 8 years is what we see, because they're just parking money for a period of time. They have the peace of mind that it's liquid. They get some upside potential. And if I get sick, I've got a higher death benefit that I can utilize for long-term care type event. Those are the typical clients that we see. So as you think about, again, going back to your clients, if you've got clients that are in that age, I'd say 50s, 60s, 70s, if they've got money parked on the sideline, this could be a great solution for them as well. And then the last, solution that we're seeing a lot of success with, and perhaps you can too in 2024, is what I'll just label low-cost protection, right? This is basic term insurance. Because at the end of the day, we know that not every solution that I've covered is going to meet every single person that's a client of yours, right? And maybe your clients are younger age. Maybe they are just graduating college. Maybe they're young families. And while some of these other solutions may make sense for them later down the road, they might not make sense for them today. But you understand, and they understand, they still need protection. They still need a death benefit. They still need to replace their income if something, God forbid, were to happen to them. And so term insurance with North American, I think, is a great solution. In fact, I believe our term insurance is the best solution when it comes to term insurance in the marketplace. And the reason I believe that is because we have the lowest cost term insurance in the marketplace. that provides conversion and living benefits. That's right. No other carrier in the life insurance space can beat us on price and provide conversion and living benefits. Conversion is important. Why? Conversion is important because there's so many carriers out there that might beat us on price. And when I say beat us on price, I'm not talking about large margins. I'm talking about less than what you pay for a cup of coffee at Starbucks, right? So less than $5 a month might get you a cheaper carrier than North American. But guess what? That carrier either is not going to have conversion, or they're going to limit your conversion to a really expensive product, where we say you can convert to any one of our products that I've shown you, right? The guarantee product, the cash accumulation product, the one I just shared, the Smart Builder product, any one of North America's permanent products you can convert to. You can convert a partial, right? So if you have $1 million term and you only want to convert 250,000, you can absolutely do that. And our conversions are fully commissionable, right? So as you the agent, you make a commission on the term sale, and if the client wants to convert, 30 days later, or a year later, or 3 years later, or 10 years later, you can make commissions on that other sale as well. Living benefits. Why is living benefits important? Well, I covered what our living benefits are previously. The living benefits are important because if you think about, let's say your client is 30 years old and they buy a 20-year term. The likelihood of them dying in the next 20 years, knock on wood, hopefully it's not very high. Our actuaries would say it's probably about 1% likelihood that 20-year term policy on a 30-year-old would end up in a death claim. But what's the likelihood of that 30-year-old having cancer, heart attack, and stroke over the next 20 years of their life? That goes up dramatically, right? So wouldn't it be nice to have a life insurance policy that can help offset some of the expenses that person might incur? A life insurance policy not just pays a death benefit, but could also pay a living benefit to them as well. So that's why I believe our term policy is the best product out there in the term space. It's the lowest cost product that offers these additional benefits. So think about clients, again, younger age clients. Loan collateralization, right? We see a lot of SBA loans require term insurance. We're a carrier that does a lot of that. Perhaps it's a client who has a lot of income potential, right? So maybe they just graduated from medical school or law school, and down the road they would probably be better off in an index universal life. Well, lock them in early with the term, and then you can convert down the road when they're ready, when their income is more stable, and they can do a different solution. Or maybe it's a client who already has a term. It's kind of going back to that old policy review thing. Maybe they have an old term that doesn't have living benefits, and they'd be interested in a new term with living benefits so it could be a good candidate as well. So for the sake of time here, I know I got a few minutes left. I'm just going to wrap up with a quick story here. And it's one that hopefully will bring this all back home. Story of George Mallory. Maybe you have, maybe have not heard of George Mallory. Most people, when I'm in a room and I ask this question, very few, if any, will raise their hand. And the reason most people haven't heard of George Mallory is he was a mountain climber. In 1924, I believe it was, George Mallory decided he was going to climb Mount Everest. So you can see a picture of him there. And the partner that he was climbing with went to climb Mount Everest in 1924. Never made it back home. Died on the mountain. And so we fast forward to a name that most people have heard of. It is Sir Edmund Hillary. And the reason most people have heard of Sir Edmund Hillary is because if you ask someone who was the first person to climb Mount Everest, most people will raise their hand and say, oh, that was Sir Edmund Hillary. And they would be correct, right? Sir Edmund Hillary climbed Mount Everest in 1953, nearly 30 years after Mallory died in 1924, trying to do the same feat. Now, the interesting thing about Mallory is 75 years after when he died, so 1999, there was an expedition put on, I believe it was by PBS. In 1999, their goal in the 75th anniversary was to go to Mount Everest, spend a few weeks there, and see if they can find the body of George Mallory, who died on the mountaintop. And before they went on the expedition in 1999, they talked to George Mallory's daughter, who's still alive at the time. I think she was in her 80s in 1999. They said, "Hey, we're gonna do this expedition. We're gonna try and find your dad's body. What do you think about that?" And she was pretty excited, like, "Oh my gosh, like that'd be cool if you guys find him." And she told them something. She said, if you find my dad's body, look in his wallet, because he always carried a picture of my mom there. And he promised my mom that if he made it to the top of Mount Everest, he would leave her picture at the top of the mountain. Fast forward, they go on the expedition. Takes them a few weeks. They find George Mallory's body, well preserved, by the way, because up at that altitude, Mount Everest in the ice, been frozen all those years. So you can imagine how well preserved it was. So well preserved that they could they found out that he died actually coming down the mountain, and they found his wallet on him. Sure enough, they remembered the story the daughter said. They opened the wallet, no picture of the wife to be found there. So pretty crazy when you think about it, right? Like, oh my gosh. Could it be that George Mallory, 30 years prior to Sir Edmund Hillary, actually was the first person to make it to the top of Mount Everest? We don't know for sure, but some suspect that might be the case. So Edmund Hillary, he didn't die until I think about 2008. So he's still alive in 1999. One of the reporters that caught wind of the story asked Sir Edmund Hillary, questioned him in 1990 and said, hey, what do you think about this new information we have? Do you think George Mallory is actually, did he beat you? Be the first person to climb Mount Everest? And Sir Edmund Hillary's response was this: no, he didn't. I'm still the first person. Because it doesn't matter if you made it to the top. It doesn't matter if he made it to the top. I'm the first person to successfully make it to the top and make it all the way back down. So I want you to think about that as it pertains to you and your clients. How many of your clients are prepared for retirement? Prepared for, what that looks like? Prepared for the things that might happen in retirement? And are they just focused on getting to retirement, or are they focused on living through retirement? What impact could taxes have? What impact could a long-term care event have? Are they leaving the right legacy? Right. And so if we think about that, as I, and use the Everest story as an analogy, it's not enough to make it to the top of the mountain. Only matters that you make it to the top and all the way back down as well. And I would say you are in a position to help your clients with that, to help bring these solutions to them in a way that matters, in a way that puts them in a better position than they were before, in a way that provides them a comprehensive retirement plan, or at least puts them on the right path to get there someday. So in wrapping up, my ask of you would be, hopefully you can think about your client database. Think about the clients or prospects that you have in front of you. Is there a solution here that can help you win in 2024? Please, rely on Tony, rely on the entire IMES teams, as well as us at North American. How can we help you? Is there product information, illustrations, more conversations we can help you with so you can be more confident in front of those producers, in front of those clients? And then lastly, I hope that you can present that solution to your clients. Again, not only to put them in a better place, but that you can have a successful 2024 as well. So with that, Tony, again, appreciate the invitation to be with you all today. And I'll turn it back to you.
Thanks, Andrew. That's a lot of useful information. Do appreciate you joining us today. I'm going to switch this back over to me. Just have a couple of quick closing points here. Can you see my screen?
Yes, I can.
Okay. So right here is the life sales team. You can get in touch with us. Here's our email address here. So it's myself, Beth Redcliffs, John Lemaster, and Paul Williams. So if you do have additional questions about what we discussed today or anything life insurance related, definitely give us a call. Or shoot us an email. As you see at the bottom of the screen, our number here is 800-255-5055. Do have a couple of polling questions I want to get to really quick. If you wanted more information on the topics that we discussed today, if you could respond to that polling question, make sure to get some additional information out to you. So I'll leave this up here for a few seconds, give you time to reply. See, we have some people still responding, so I'll keep this up a little longer. All right. And if you're not appointed with North American, I strongly encourage that you do get appointed with them. As Andrew spoke about earlier in regards to products, I think they can be a one-stop shop for you because they do both guaranteed universal life, index universal life, and term um, life as well. So if you'd like to get appointed with North American, go ahead and respond to this uh, polling question, and we'll make sure to get the appointment link out to you. All right. Okay. And lastly, for this content, along with other content, you can like or follow us on Facebook, on our website, as well as LinkedIn. Any parting uh, thoughts, Andrew, before we go?
No, just again, thank you for the opportunity to be with you and everyone, the Ives family, this morning, and let us know how we can help.
I want to thank everyone for joining. Everybody have a great Western week.